Welcome to Hedge and Haven, your exclusive pass to the world of billionaires, hedge funds, and high-stakes wealth strategies. Today, we're diving deep into a financial mystery that's got Wall Street buzzing. Warren Buffett, the legendary Oracle of Omaha, is sitting on a jaw-dropping $200 billion cash hoard in 2025. That's more cash than the GDP of entire nations. Why is the world's most iconic investor refusing to buy stocks and stacking cash like never before? Is this a screaming warning of a massive market crash looming in 2025? Or is Buffett playing a chess game so brilliant it'll redefine wealth building? Buckle up, because we're unpacking this step by step, with insights you won't find in mainstream news, plus actionable tips for investors in the USA, UK, Canada, Australia, Germany, France, Norway, Switzerland, and Denmark. Let's get started. First, let's set the stage with who Warren Buffett is and why his moves matter. At 94, Buffett runs Berkshire Hathaway, a $1 trillion conglomerate with stakes in Apple, Coca-Cola, and American Express. He's not just a billionaire, he's the gold standard of investing, with a track record of beating markets for 6 decades. His nickname, the Oracle, comes from his uncanny ability to predict crashes and capitalize on them. Think 2008, when he scooped up Goldman Sachs at rock-bottom prices, or 2020, when he nabbed Dominion Energy post-COVID. So when Buffett holds $200 billion in cash, doubling his hoard in just 2 years, it's not random, it's a signal. But a signal of what? To answer, let's look at the markets in 2025. The S&P 500's price-to-earnings ratio is at 28, near historic highs, driven by tech giants like Nvidia and Tesla. Inflation's creeping up at 3.5%, trade tensions between the US and China are escalating, and geopolitical risks like Middle East conflicts are spiking oil prices. The VIX, Wall Street's fear gauge, is at 25, a level that screams volatility. Buffett's not blind to this. He's reading the same data we are. So why cash? Theory 1. Buffett sees a market crash coming. Overvalued stocks, especially in tech, are showing bubble-like traits. For example, Nvidia's market cap hit $3.5 trillion in 2025, but its revenue growth is slowing. Buffett's been here before. Think the 2000 dot-com crash? Back then, he avoided tech stocks, held cash, and bought undervalued assets post-crash. Today, hedge funds are mirroring him. 65% have cut equity exposure. Per Bloomberg, and JP Morgan's warning of a correction aligns with Buffett's caution. Theory 2, it's not just a crash, it's opportunity. Buffett's cash is ammunition to buy when markets tank. Post-crash, blue-chip stocks like Procter & Gamble or energy giants like Chevron could drop 30 to 40%, and Buffett's ready to pounce. But there's a twist. Some analysts argue Buffett's cash hoard isn't about a crash at all. Berkshire's size means he needs mega deals, $50 billion plus acquisitions, that aren't available at current prices. Plus, at 94, he's playing it safe, prioritizing stability over risk. Let's dig deeper into Buffett's strategy. His $200 billion isn't just sitting in a vault, it's working. Berkshire's parked 60% in short-term treasury bonds, yielding 4.5% in 2025, generating $9 billion annually without risk. That's passive income most countries envy. He's also quietly eyeing AI startups, with rumors of a $5 billion stake in a Silicon Valley AI chipmaker. Why AI? It's the next frontier, and Buffett missed the early tech wave. Think Google, Amazon. He's not making that mistake again. But don't expect him to bet big yet. Buffett's discipline is legendary. He waits for fat pitches, deals where risk is low and reward is massive. Historical data backs this. In 2008, Berkshire's cash hoard was $40 billion pre-crash. Post-crash, he deployed it to earn 10 times returns. In 2025, he's setting up for a repeat. Now let's talk markets and what a crash could look like. If 2025 brings a correction, expect tech to lead the fall. Think 20 to 30% drops in stocks like Apple or Microsoft. But sectors like energy, up 15% this year on oil demand, or consumer staples, like Walmart, could hold steady. Buffett's already overweight in energy, with a $20 billion stake in Occidental Petroleum. He's also betting on Japan, with $10 billion in trading firms like Mitsubishi. Why Japan? Low valuations and stable growth. Classic Buffett. For European viewers, especially in Germany and France, your markets are less exposed to tech bubbles, but vulnerable to energy shocks. Norway, Switzerland, and Denmark. Your sovereign wealth funds are hedging with gold and bonds. Smart moves. Australia and Canada, your commodity-driven economies could benefit if oil and metals rally post-crash. So what does this mean for you? Whether you're a retail investor or just curious about the 1%? First, don't panic. Crashes are opportunities. If Buffett's preparing, so should you. Here's how. Allocate 10 to 15% of your portfolio to cash or bonds to seize post-crash deals. Focus on defensive stocks. Think Johnson & Johnson or Nestlé, which thrive in downturns. 4. US and UK viewers, ETFs like the SPDR S&P 500, SPY, are safer than single stocks. In Germany and France, consider the iShares MSCI Europe ETF for stability. Norway and Denmark, your pension funds love bonds. Follow suit with 10-year treasuries. Australia, lean into mining giants like BHP if commodities spike. Second, avoid FOMO. Crypto's at 80K for Bitcoin, but regulatory crackdowns in the US and EU could tank it. Luxury real estate, hot in London and Dubai, but overpriced in secondary markets. Hedge funds? They're betting on gold, up 22% in 2025, worth a look. Let's zoom out with a history lesson. Buffett's cash strategy isn't new. In 1987, before Black Monday, he held cash and avoided overvalued stocks. In 2000, he skipped the dot-com frenzy. In 20, he bought pipelines when oil crashed. Each time, he turned fear into fortune. In 2025, he's signaling the same. Patience pays. But here's a contrarian view. What if there's no crash? Some economists say the US economy is resilient, with 2.5% GDP growth and unemployment at 4%. Maybe Buffett's just struggling to find deals. Still, even then, his cash earns billions, and he's poised for AI or energy acquisitions. Either way, he's winning. Before we wrap, let's touch on 2025 trends to watch. Crypto's a wild card. Regulations could crush altcoins, but Ethereum's up 30%. Real estate's bifurcated. $200 in Bezooz, London mansions are selling, but suburban homes aren't. Hedge funds are rotating into commodities and shorting tech. And private jets, demand's up 15% per Gulfstream, despite sustainability pushback. So is Buffett's $200 a crash warning or a masterstroke? You tell me, drop your thoughts in the comments. If this helped you navigate the wild world of finance, smash that like button, subscribe, and hit the bell for more billionaire secrets, hedge fund hacks, and wealth strategies. Hedge and Haven's here to keep you ahead of the game. Stay smart, stay wealthy, and we'll see you in the next one.